This is Matthew Cratter from Trader University, and today I want to talk about my latest price targets for Bitcoin in 2020. If you're interested in learning trading strategies that make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So before I examine the price targets, I want to talk a little bit about trader psychology and how you need to trade these things. There's a great quote from Ed Seykota in I think it's the first Market Wizards book, which is a group of interviews with very famous traders that Jack Schwager did. I highly recommend the whole series. But there's a famous quote from him that's often trotted out: win or lose, everybody gets what they want out of the market. Some people seem to like to lose, so they win by losing money. Ed Seykota is a very profound psychological thinker. And one way of testing this is that you can try to see people's reactions, especially traders and investors' reactions to a company like Amazon. When I see a chart that goes from the lower left-hand corner to the upper right-hand corner and has been going mostly straight up for 20 years, I see a very successful company, perhaps not always the most ethical or not ruthless company, but nevertheless a very successful company and stock. And so this can be sort of a Rorschach test for you. If you see a chart like this and it makes you mad or it makes you somehow upset, there may be something wrong with your psychology. And so I've been hearing people telling me for the last 20 years, Amazon's in a bubble, it's overvalued, it's overpriced, it's looking toppy here, etc., etc. I don't like buying this because it's hitting new highs. Always hearing things like that. And these kind of people, I've heard many people say, many people have said to me over the years, I'd much rather buy Exxon than Amazon. Price action tells you a lot about a market. It's not always correct over short periods of time, but you can tell a successful company by looking at a long-term monthly chart. And when you see something like this, where a company has topped and is heading back lower, you should really think twice about investing for the long term, certainly. Or you should try to figure out what's happening. Maybe there's a good explanation for why oil prices are where they are and where ExxonMobil stock price is where it is. But these are the kind of charts, if you dig or if you fish in a pool that contains stocks like this, you will do much better over time. Now, the problem with this is that it's very difficult psychologically to buy things that are hitting new highs, new 52-week highs, new monthly highs, new all-time highs. People don't like doing it, and they find it very difficult. On the other hand, if you're going to buy something, if you want to own something that goes up a lot, if it's going to go up a lot, almost by definition, it has to hit a lot of new all-time highs. Amazon's been hitting new all-time highs really since the late 90s, since its IPO. Not to say that there haven't been some massive drawdowns, but the overall trend here has been higher, and buying breakouts has been a quite good strategy on Amazon. And I think we're seeing something similar with Bitcoin. This is a monthly chart of Bitcoin. Bitcoin, to be honest with you, should have died a long time ago. It should have died at the end of 2018. It should not have had something that looks like this. Something that looks like this is perhaps an echo bubble and maybe should have really hit new lows. But the fact that we're trading here at new monthly closing highs, if we were to close here, is very, very strange. And it tells you something is happening in this market. This is an example of a market that's not understood by a lot of people. People say Bitcoin's a bubble, just the same way they said Amazon was a bubble. They say it doesn't have any commodity value backing it. They say it's going to be banned by the government, etc., etc. But just the price action should, if nothing else, should help to open up your mind if your mind is closed. The U.S. government is not going to ban Bitcoin anytime soon. That should be clear. Instead, what they're actually doing is making it more legal and more accessible. You can now purchase Bitcoin through CashApp. And these are the fundamentals here that are driving Bitcoin. Before the halving in May 2020, when the miners' reward got cut in half, CashApp, according to this is a Dan Morehead tweet, and he obviously manages Pantera Capital. CashApp was buying 20% of all newly issued, newly mined Bitcoin. Now, post-halving, it's buying 40%. The Grayscale Bitcoin Trust is buying a huge percentage. Institutional investors are buying a huge percentage. And now we have the CEO of PayPal Dan Schulman, saying that clients are signing up for their crypto services, which I guess are going to be rolled out in early 2021 at a much faster rate than anyone expected. So these are the fundamentals that are driving things. And so waiting for Bitcoin to drop, again, none of this is investment advice, but when something is on a run, it's I personally like to buy breakouts more than I do pullbacks, especially when you understand the fundamentals of a story and you know that we're currently in the most bullish 12 to 18 months of the Bitcoin cycle. It's that 12 to 18 months following the halving. Halvings happen every 4 years. We just had a halving in May 2020. So the most bullish period for Bitcoin really should be this period from May 2020 through December, call it December or November 2021. So if you're waiting to add on a dip, been a lot of people asking me what they should do. Obviously, I don't offer investment advice. I think what makes the most sense for volatile assets like Bitcoin, you first have to research it and really understand it, talk to your financial advisor, and then you should probably just cost average into it by a fixed dollar amount every week or every month, and you'll get a decent average price. Obviously, if Bitcoin goes straight up, you will somewhat lag the market. If Bitcoin goes straight down, you will somewhat outperform the market, etc. But it's a very good psychological tool if you're unable to buy breakouts to dollar cost average. So let's talk a little bit now about price targets for Bitcoin. I'm going to return to this tweet. This is a tweet by Plan B, who's a quant who lives in Europe, and he has a very interesting model here. He talks about the correlation, the co-integration of Bitcoin and the S&P 500, and how both are driven by central bank money printing, in particular the Federal Reserve printing a lot of money. So he has a very interesting correlation equation or regression equation, I think you might call it, linking Bitcoin and the price of the S&P 500. So we can see this gray line, this wiggly gray line under here is the model price. And then these colored dots are the actual price of Bitcoin over that period in time. So we can see right now Bitcoin is undervalued according to this model. We're gonna talk briefly about where this model says Bitcoin should be right now, but we can see right now it's undervalued. There are other points at, for example, at the end of 2017 when Bitcoin got very far above this fair value. Now again, this is a model. There's nothing that says it has to keep working in the future, but you can see it's been even if you know nothing about statistics, you can kind of eyeball this and say, well, it's been kind of an interesting approximation of where Bitcoin should trade. So the formula I'll be using is right down here, and what it says is that the price of Bitcoin in this model is equal to the Euler number. Euler number is just also called E, is 2.71828. Price of Bitcoin should be equal to the Euler number to the minus 60th power times the price of the S&P 500 to the 8.7th power. You can get the price of the S&P 500. You can just go to Yahoo Finance. I'm using yesterday's closing price of 3,443, even though we're trading almost 2% higher before the market opens this morning. But this is using yesterday's prices. If we plug these numbers in, we plug in the number for the S&P 500, we plug in the number for E, we end up with a fair value for Bitcoin of 51,782 right here. As we've said in the past, it's traded above this fair value. So we can see that with all these fundamentals happening, even with Bitcoin moving up something like 40%, almost 50% over the last few weeks, it's really gone from 10,000 to almost 15,000. As I'm recording this, we are still quite undervalued according to this model. So this model is saying we should be trading close to 52,000 per Bitcoin. Now, what's very interesting about this is this suggests that being long Bitcoin is a little bit like being long a levered version of the S&P 500. And the way we can see this is that simply because you have the S&P being raised to this power, to the 8.7th power, if the S&P 500 goes up 10%, Bitcoin will go up. Basically, I'm taking the value of S&P times 10%, and then raising it to the 8.7. So if the S&P 500 goes up 10%, Bitcoin should go up 2x, more than 2x, 2.29x. If the S&P 500 doubles, which I think it certainly will over the coming years, we're going to go full Zimbabwe, full Venezuela in the U.S. We're just going to print and print and print. And this is one reason stock prices just keep going up. It doesn't matter if there's COVID, it doesn't matter who's president. Stock prices go up because the money printers at the Fed are in charge of things. And so if the S&P 500 doubles from here, goes from, what did we say, roughly 3,400, then the price of Bitcoin will go up. If the S&P 500 doubles, in other words, we have a 2 here, the price of Bitcoin will go up 416x according to this model. Now again, this doesn't have to happen, but even according to the model's pricing right now, Bitcoin should be at $51,000 or $52,000. So that's sort of the S&P 500 Bitcoin regression equation. Let's look at a different model that Plan B has. This is from his original paper in March of 2019. I'll link to this so you can read it if you want. Basically, this looks at the stock to flow of Bitcoin and compares it to various things like gold and silver. Stock to flow is basically just how much existing inventory you have divided by the annual production. Obviously, the annual production of Bitcoin has been dropping every 4 years. It's been halved. And if we use this, if we look at the price of Bitcoin, if we can get this roughly to the beginning of November here, call it November, well, it looks like I can only get November 8th. Bitcoin here, according to this model, is at 21,687. Now you can say these are just models. Who cares? Who cares if they're going to work? You can see, though, that this has been a fairly good model in terms of Bitcoin's price. It's traded at times above the model price. Again, this line here is the model price. The colored dots here are the actual price of Bitcoin over time. It's traded above and below. It's a fairly good approximation. And even if you don't believe in Plan B's models, even though he's a very sophisticated quant, he manages pension money or works for a pension company in Europe, even if you don't believe his models, there are a lot of people now on Wall Street who are paying very close attention to them. And what there's a very good chance that will happen is people will begin to use these models in their portfolio allocation decisions. And what you can do is you can tell your investors, or you can tell your boss when they say, why did you buy Bitcoin? You can say, well, look, this is the fundamental value. It should be trading at something like 21,000, or it should be trading at 51,000. I'm basically a value investor. I'm buying Bitcoin here on a dip below fair value. At the same time, there are all these very nice fundamentals behind it. The PayPal news, the CashApp news, MicroStrategy buying Bitcoin, Square buying Bitcoin, etc. A lot of U.S. corporations beginning to use Bitcoin as a treasury asset. That is a replacement for cash or bonds for the company's own balance sheet. And so the result of this is that you could have a front running of the models. I've talked about this a little bit, but if people believe that the Plan B stock to flow model is going to work, and if they believe that the model here has Bitcoin at $1 million per Bitcoin, really at the time of the next election, maybe right after in 2025, in 5 years from now, what they will begin to do is, if you think the way this works is, if you think there's a 20% probability that this is correct, that this model will still be holding in 2025, what you do is you calculate the expected value. You basically say, well, there's a 20% chance it's going to hit 1 million and a 80% chance it's going to go to 0. If you weight those two probabilities, you end up with 20% times 1 million plus 0, which gives you $200,000. And so we can have something happen here where Bitcoin overshoots its fair value massively, and institutional investors begin to price in the 2024 halving and the 2028 halving. And that way we get to Bitcoin 200,000, 500,000, even 1 million much more quickly than people believe is happening. So I would encourage you to ask yourself, what kind of investor are you? When you see a chart like this, does this make you happy or does this make you sad? You certainly don't want to invest in companies that have a chart like General Electric where they go down and down and down every month, every week, every decade. And so I would encourage you to examine your own psychology. This doesn't mean you should buy Bitcoin. But what it does mean is if this has piqued your attention, you should investigate these pricing models. You should begin to think how they work. And this is how you should use, you should have sort of a fundamental model, a rational model for investing in Bitcoin. So you don't get carried away by these price moves. It's very disorienting to see Bitcoin trading at 11,000 just a couple weeks ago, and now it's at almost 15,000. The human brain has trouble processing this. It's hard to know whether it's a bubble. Is this just ridiculous FOMO? What I would suggest based on these models is that none of this is irrational. In fact, things are just getting started. I expect stocks to go up massively over the last 12 months. This is what I've been saying. Doesn't matter who becomes our next president in the U.S., stocks will go up massively. They went up massively under Obama, Biden. They went up massively under Trump, and they will go up massively under whoever becomes president. And stocks going up means Bitcoin going up as well, simply because of all the money being printed. So I'd encourage you to keep in mind these fundamental models. Obviously, models can break. They don't have to take us all the way to 1 million or $5 million Bitcoin, but they can certainly take us to $50,000 Bitcoin, $100,000 Bitcoin, $200,000 Bitcoin, no problem at all. In this case, it wouldn't really matter if you believe this. It wouldn't really matter whether you pay $10,000 for Bitcoin or $15,000 for Bitcoin. Obviously, you can have a much higher return if you pay $10,000, and this is why I've been talking so much about Bitcoin, especially when it was trading below $10,000. I made video after video after video, and probably drove a lot of people away from the channel doing that. But I really still see this as one of the greatest, probably the greatest investment that I will see for the rest of my life. I've never seen anything like Bitcoin. It's such a small float, such a small supply, and there's just a completely huge wave of money getting ready to come into Bitcoin, and we can already see that's beginning to flow in. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell so you can be notified when I publish my next video, and let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.